Hi, my name is Mina Rickey,
And I am Lydia Korczak.
and today we are interviewing Toby Mathis, Esquire. He's an attorney on a mission, guiding investors and business owners to grow and prosperity. A founding partner of Anderson Business Advisors, he has helped Anderson's grow its practice from one of business and estate planning to include a thriving tax practice and registered agent service with tens of thousands of clients nationwide.
Toby explained his accomplishments. I am a tax attorney basing my strategies on successful results of our clients. We see what successful investors have done over 20 years and applies those common senses legal strategies to our clients' benefit.
Anderson stands out due to Toby's expertise in applying the tax code, asset protection, and probate and trust statutes.
Their achievements have been noted 5 times by Inc.'s 5000, along with Anderson being recognized in multiple years as one of the best practices to work with. Number one value rating in Nevada 2021.
Toby also advanced his clients' interests by combining expert tax advice with his personal experience investing in over 200 of his own real estate projects in the United States.
His expertise reaches many others through his award winning publication, including Tax Wise Business Ownership. Now it's in its fourth edition, and Infinity Investing How the Rich Get Richer and How You Can Do the Same.
Published by Forbes Books, Infinity Investing is a number one bestseller on Amazon and was awarded a Global Book Award gold medal.
His influence extends even farther due to his extensive teaching throughout the U.S. to groups of investors and professionals, including a popular biweekly live streaming webinar, Tax Tuesday.
Many of these courses are certified as continuing education credit for legal, accounting, and real estate professionals.
He is a member of the Forbes Real Estate Finance Council. Toby continues to crusade on a daily basis to help investors and business owners preserve their wealth protected from lawyers, snoops, and algorithms, and create amazing legacies for future generations.
And welcome to the show, Toby. Thank you for being here.
Hey, this is awesome to get to talk to you guys.
Yeah, nice seeing you again.
Yeah, so you were in Orlando with us for 3 days, right? No, 4 days.
That's right. Yeah. Well, I was 3 days. Bina was 4 days.
No.
I had to leave the last day where they talked about the charity events.
So like, what's wrong with you guys? You're hanging around lawyers and accountants for 3 days. Like, did you have nothing else better to do?
You made it sound very sexy and very approachable and learnable, actually. You and Clint rock.
I appreciate that. He's the pretty one. He does a really good job. He really lays it out well. I come and
Yes,
I get to
he
talk
is.
about tax all the time. I'm like, all right, let's talk about some code.
But
It-
hey,
It was 3 days and 4 days actually. And out of the 3 days, we talked about assets and asset protection and tax. And I tell you what, and I shared this with Clint, I changed my approach to taxes. I was thinking about it the wrong way. You guys just shine that light on what is the concept of taxes. Why don't we start there? I honestly, I'm just gonna say something else, Toby, before you start talking. I wish everybody would join your course either online or in person. I'd rather be in person so I can learn everything, but it is incredible and it is so important for people to know what you guys are trying to teach and to share with everybody. So let's talk about taxes for just a minute here.
Taxes. Gotta say, like, taxes are so much fun.
Yay! So-
Taxes are so misunderstood, and it's so much fun when you actually start diving into the things. But go ahead and ask your question. I don't want to get out ahead.
Well, let's talk about the approach of taxes. I used to think that we just pay taxes to the government so the government can continue to work and continue to exist. I mean, that's way off.
No, there's two types of taxes, really. Like, there's the taxes that are levied on us, and then the taxes when they print money. and it devalues our assets, unless you have assets that it does the opposite to. Like, so the wealthy tend to benefit when they print out a whole bunch of money, right? Because it's gonna drive their growth of their investments. And so if you have real estate or stocks or things like that, it tends to be not a bad thing when you have really high inflation. It drives things up like crazy. And then you have the Fed raising interest rates, trying to temper it. But you're looking at it going, if you just quit printing all that money, maybe that would stop doing it. And then you have the taxes that they impose on us. And I think we got a little bit of class warfare going on with the tax thing, where they say like, oh, the poor aren't paying any taxes, which is a lie. And then you say, and the rich don't pay their fair share, which is equally a lie. And it's like what you have is a tax code that's built on incentives, and it punishes certain types of behavior. I always think of it like when I was in Catholic school. If you misbehaved, you're going to get a ruler on the knuckle, or you're going to get an eraser upside the head, right? And the tax code's no different. It's literally saying to you, hey, certain types of income are going to be treated better than others. And when you start really diving into it, you realize two things. Number one is that there's a ton of ways to avoid taxation if you want to. If you're wealthy, you're probably not paying much in income taxes. You might pay other types of taxes like sales tax, real estate taxes. There's lots of taxes. But income taxes, they're going to give you a reprieve on because you're doing the type of activities they want you to. And it really comes down to knowledge and willing to change your behaviors as to whether or not you want to pay taxes at all. We all could avoid them if we changed our behaviors and we knew a little bit. And once you realize that, then taxes are a lot of fun because you're like, hey, where's the gold? It's kind of like digging for gold. It's like, where is it? I know it's around here somewhere, and you're willing to get your hands dirty, and it's usually a big payoff when you get a nugget. And you could save a lot of money. And real estate's one of those areas where there's a lot of gold nuggets if you know where to look.
Okay, I was riding the bicycle with my good friend, and she says, I'm just sick and tired of the rich paying zero taxes compared to the poor people. And I thought, wait a second. That is available to everybody. The tax code is available for everybody. Anybody that wants to go searching for that gold can do it. Now, I have a very specific question, Toby. For instance, we have a lot of people in the medical field that have high salaries. How can they mitigate? Just maybe a quick strategy on how could they mitigate
Yeah,
paying all those high income taxes.
so they have rich people problems, right? If you have a high W-2, you have the worst type of income from a tax standpoint. You're getting hit with old age disability and survivors, Medicare, state income taxes, federal income taxes, and you don't get a choice. They're literally probably taking it right out of your pay. Or you're a contractor getting 1099 and you have some chances to mitigate it. But in either case, you can absolutely do some things to mitigate that. Again, it comes with knowledge and willing to put some things into action. And it might be as simple as saying, hey, I want to take advantage of a 401k or a defined benefit plan. And even though I can't control how much I am being paid, I'm going to defer some of it. And I'll defer it till I'm in my mid 70s, 74 or whatever it is. It's like I could push it way out there. Or you say, hey, you know what? I'm going to set up something that benefits society. Maybe I'm going to do some charitable activity. And I know that for every dollar I put in there, I'm going to save 37 cents, in some cases up to 50 cents. And all of a sudden there's an incentive there. Maybe it's you say, hey, you know what? I love real estate investing. Are there any kinds of real estate investing that will help me not pay so much on my high W-2? And you realize there's things like Airbnb where it's treated as a normal business if it's short-term rental. And you can create accelerated depreciation and write that off against your W-2 income if you materially participate in the Airbnb. Like there's little levers that you can pull and magically you get some tax benefit. Or maybe it's, hey, I have a spouse and they're really into real estate investing and you qualify as a real estate professional, in which case taxes for you almost become voluntary. Like if you want to eliminate them, you certainly can. You could do some things to mitigate and bring your tax bill pretty darn close to zero in many cases. It's just whether you're willing to change some of your behaviors. And then there's things like, and I know this isn't what we're talking about today, but there's like oil and gas and some other investments where you can get an immediate tax deferral. Like you're going to get a big write-off this year, and then you're going to spread out income over a period of years. But what it does, it allows you to keep more of your money this year. Like there's all sorts of things that are out there that if you learn about them, then you could choose, I'm going to do this one and this one. And it could have a pretty drastic impact on the amount that you're paying, even if you're a surgeon or a high paying, in a high paid position. There are still things you can do. Don't let anybody tell you that there aren't.
Now, is this legal? Because a lot of people say, oh, it's illegal.
No, it's absolutely 100% legal. In fact, it's recommended. So the tax code is written, I would say like this. It's 10%, here's the stuff you have to pay taxes on, and 90%, here's how you can defer or avoid it. So for example, you may get a tax deduction on an HSA. This is the triple threat, a health savings account, where you put money into a health savings account. You get a deduction for putting it in there. You never pay tax on any of its growth. You could invest it in stocks or real estate, even if you're self-directed. And as long as you use it on health, you never pay tax on it when you take it out. So you literally get free tax, like tax-free money. I get a write-off, and I never pay tax ever again on any of the growth or that money. And all it is, oh, I just have to meet this qualification. 100% legal. You're almost crazy not to be doing it. But people are like, oh, but once I get into taxes, won't I get audited? No, like the audit rate's like 0.1% right now. And you know who gets audited are the people that don't make any money. Like if you really get down into it, the people that are in the highest audit rates are people making less than $50,000. They're just getting torpedoed because they can't afford to defend themselves. It's literally, when I look at this, and you can go look at the studies. Syracuse University does a study every year where they show the ratio per 1,000 returns of how many people are getting audited. And it's about 13 to 1, the poor versus the wealthy. And so like anytime, yeah, it's not even close. It's not like, it is so egregious. And I could blow your mind. Like you want to talk about really unfair. It's like African Americans are about 4 times more likely to be audited than any other ethnic group. And it's not something that you put on a tax return. So somehow it's just happening. And if you're one of those people that immediately says, well, what about it's because of the earned income tax credit? Nope. You looked at exact side by side ethnicities, same economic spot, and it's still going on. Yeah, the tax code's really not particularly fair the way they're enforcing it right now. And it almost becomes this thing where it's like, yeah, I'm gonna look for the benefits so I don't become one of those victims over there, the people that aren't gonna take even 10 seconds to try to learn about ways that they could defray it, but they're gonna complain nonstop about how they have to pay it, right? They're not even trying to avoid it, and they're just complaining, oh, taxes are so unfair. If I try to do anything about it, I'm just gonna get audited anyway. The facts don't bear that out. Absolutely 100% false, but maybe it makes them feel better.
So one of the biggest question is, how can somebody asset protect their property, their investments, and pay taxes what it's owned, but not overpay?
It's actually really, really simple. When you look at asset protection, I'm always kind of like thinking of it as luggage. So think of it like this. The more stuff you get, it becomes kind of hard to carry it around with you, and somebody might come up and take it from you. So like if you're walking down the street and you're holding a big pile of cash, expect somebody to walk up and try to help themselves to it, right? You're kind of susceptible, and you might drop it on the sidewalk, right? So you might want to put it into something. And that's all asset protection is to me at its core, is isolating your stuff and making it hard for other people to get out. So you might put it in a rolling case, right? And then once something's in a rolling case, what is inside it and could it cause problems? So like if I'm traveling and I have shaving cream, I'm growing a beard, so I don't use shaving cream, but how about toothpaste? So like I have toothpaste. I might not put it in there with my silk dress or some nice clothing, because if the toothpaste busts open while I'm traveling, it's going to get on over everything. So I might put it in a little Ziploc bag or something to contain that. That's what we're doing in asset protection. We're saying, what's the toothpaste? What's the really nice stuff? What's the cash? How can we isolate the bad stuff from the good stuff? So if anything happens, that we don't lose everything. Like, hey, if your toothpaste explodes while you're on a plane, it doesn't destroy everything else that's in the suitcase. And that suitcase makes it really easy for me to compartmentalize and carry along my assets during my lifetime. And even more importantly, and I know we never talk about this stuff, but if I become incapacitated and I'm just carrying around a whole bunch of assets in my personal name, it becomes really tough for people to get control of those assets, especially if I die, right? You're going to have to get a court involved. You're going to have conservatorship, or you're going to have probate if I die. If I just put it into a nice carrying case, then I can hand that to somebody else if I'm incapacitated or if I pass away. And it's really easy to create legacies. For whatever reason, in the United States, we're almost like, hey, you really shouldn't think about that. You really shouldn't think about your legacy. That's only when you get old. It's like, no, it really should be when you first start. You're thinking like, hey, if I create, for example, you guys are awesome at promoting perpetual assets, things that are going to pay money for hundreds of years. When I buy a piece of real estate, it's not 30-year property that just goes away after 30 years and disappears, right? It's if I maintain that property, it's going to be paying my family for 100 years, 200 years, 300 years. I should be thinking, how do I make sure nobody ever takes that from my family as long as I'm investing in it? How do I make it to where nobody can take that from me and it doesn't get eaten up by a bunch of lawyers if something happens to me? And that's all asset protection really comes down to, is we're looking at known risks and we're mitigating them, including taxes. Taxes are a known risk. And I know this might be getting into the weeds, but I'm going to say it anyway. Real estate people have a choice. A lot of times they don't realize they have a choice over what period of time they depreciate assets. A lot of us are brainwashed into thinking it's 27 and a half years to 39 years, right? They hear that over and over again. Oh, you write things off over their useful life. And for real estate, it's 27 and a half years. That is not true. It is a default if you're not going to break out the components of an asset that you can go over the longest life asset. Like, hey, I can write off everything over 27 and a half years if I buy a single family home and I make it into a rental. You could choose to do that. The appropriate methodology is actually to break its components into their useful life. So like your carpet's not going to last 27 and a half years. Why are you writing it off over 27 and a half years? It's going to last maybe 5 years. And the IRS says it'll last 5 years. But we'll still write it off over 27 and a half years. And then to make it worse, when we sell it, we have to recapture that and pay tax on it, whatever we wrote off. So it's like, hey, that's like a kick in the shin. I didn't realize that. I never got to write off the carpet. That's because you wrote it off wrong. Like, you should be breaking it into its components and saying that's 5-year property. I'm going to write it off faster. And I'm not going to pay tax on it when I sell it. Now, I'm going to pay capital gains on any of the increase in value, but I'm not going to have recapture on it. And the problem is people do not realize these things exist. And they work with people that just follow along like, well, you have to pay taxes. No, a lot of times it's voluntary, and you're doing something that's serving society, especially if you're a landlord these days. Like, we are underbuilt. We need landlords. Here's a huge incentive that Congress says, if you do this, we will give you this benefit. And you're like, I don't want to know. I might get audited. It has nothing to do with, one has nothing to do with the other.
Mina, I had an interesting experience the other day. I was showing properties to a family with 2 kids, and we had 10 to see. After viewing about half, the family was getting pretty hungry, and they really just wanted to continue the other day.
So what did you do?
I went to my car and pulled out a bag of delicious Rickey Jerky. They loved it so much they were able to continue our day without any issues. All the ingredients are 100% natural, plus every strip is seasoned, marinated, and smoked by hand to give you the best experience and slap you back into the gear. But I need to buy some more.
Oh, just head over to rickysjerky.com and use the discount code, the code REI, for 15% off your first order.
So whether you're a busy real estate agent or just looking for mouth-watering snack on the go, Rickey Jerky got you covered. Wow.
You are saying that people need to be active on how they live their life. How do they get their money? How do they spend their money? How do they pay their bills? They have to be actively involved, searching, looking, understanding, stopping the fear or whatever. If our mom and dad taught us how to do taxes, and then our only tax professional is our accountant, we are in serious problem, because the accountant, all he wants to do is just get it done along with the other 200 jobs he's got in the months before April 15th. And that is just not a strategy.
Now, hey, let me share a story with you, because the true story. So a guy comes in, he was a fighter pilot, high functioning individual, very successful business guy, comes into my office in Las Vegas, actually physically shows up, and he sits down, and I look at his stuff, and he was operating as a sole proprietorship from a tax standpoint. He had an LLC, but he was still operating as a sole proprietorship, and he was making, many hundreds of thousands of dollars a year in profit. And the first thing I said was, I looked at him and I go, "Why are you sole proprietor? Like, you've been audited before, haven't you?" And he was like, "Yeah, a couple of times." I'm like, "You're in the highest audit rate. You're going to lose every audit. Like, we can actually look at those stats. You're about 800% more likely to be audited as a sole proprietor than an S corp, and you're overpaying your taxes." In his case, was about $25,000 a year. And I said, "You could just file this one form. You don't even have to change the entity. You just file this one form, and it'll make it into an S corp, and then take a small salary, put it into your retirement plan. You already have a retirement plan. Let's turbocharge your retirement." He actually qualified for something called a defined benefit plan, and he was able to put hundreds of thousands of dollars a year into it and defer the taxes. So I'm sitting here having this conversation with him, and he says, "I've had my accountant for 20 years. There's no way he didn't tell me that this stuff existed." And I said, "Well, I mean, we call him." And I still remember it like yesterday, because his accountant was a guy, I'll just call him Mike. And Mike had a voice like this. Like, he had one of those voices like, "Hey, what's up?" So we get him on the phone. I put him on the speakerphone and just said, "Hey, Mike, I'm Toby, and I'm just sitting here with your client, da 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 da. And we're talking about some tax strategies. And I just said, you ought to make an S election on your LLC." And the accountant said, "That sounds like a good idea." And Mark is turning purple. And he said, "Mike, why didn't you, we've been doing this for 20 some years. Why haven't we made that change before?" Quote, "You never asked me to." Right? That's most accountants. Is a lot of times you don't realize that they're just doing what you ask them to do. It's, here's my return, here's my money. And they're not really sitting down going, what's the best tax treatment of this activity? Because if they had, they would have looked at it and said, "Oh, whoa, yeah, not only is your audit risk really high, but you're also overpaying 20 some $1,000s a year in tax. We can immediately mitigate that and avoid it." And there's nothing wrong with tax avoidance, by the way. There's actually a Supreme Court Justice Rehnquist, that is oftentimes quoted as literally saying there is nothing wrong with the strategy to avoid the payment of taxes. The Internal Revenue Code does not prohibit this. Tax avoidance is perfectly fine. Tax evasion, not paying a known tax, is orange jumpsuit time, right? It's going to get you in trouble. But you can avoid a tax. Hey, if I choose to be a sole proprietor versus I'm an S corp or a C corp, throw whatever you want in the mix, and I have these choices, my outcome is A, B, or C. I get to choose. That's part of being an American taxpayer. And if you choose the default, which is to do nothing, and I just file my taxes, usually you're paying a lot more in tax. And it's just, once you realize that, then you just go and say, "Hey, you know what? I'm going to look a little bit, and I'm going to see if I have other options." And once you realize there's a bunch of other options, it's just like that client. All of a sudden, he was like, "Oh my God." Then you look back and you go, "Why didn't I do this 20 years ago? That's $500,000 plus all the interest and earnings that would have been on that. That would have been life-changing money once you realize you've been doing it wrong for that long." But the point was really well taken on the client, which he realized, I've been working with a preparer, not a planner. And I've been giving my stuff over to somebody, like his little, box of stuff. Here's what my expenses are. And they put together a return, but he never actually took proactive steps to learn anything himself. He never took it to a planner. He didn't realize that his CPA wasn't a planner. The CPA was a preparer and wasn't even in his line of business. So he couldn't really help him much at all, except this was really low-lying fruit, was, hey, just make this one. Literally, it's one piece of paper. It's kind of sad, but it was a massive result for him. And then, 5-6 years later, he was pretty cool. He was like, he'd forgotten about how mad he was at his client, his CPA, but it was just one of those things. It still remember his face. Like, he's just in shock and he's just so incensed. And it's kind of like, it was your responsibility. You abdicated it to your accountant, but your responsibility was to learn your options.
Yeah. And Lita, you can ask the question afterwards. I just want to comment. My heart goes to the people that are so busy being generally serving people, making money, getting paid by serving. They are working out there. The entrepreneurs, they sleep little, they eat off times, and then at the end they just go and pay it all back to Uncle Sam. It just breaks my heart. Go ahead.
So my biggest question to you is, what is the biggest mistake that someone makes when they're making, they're those top earners with their income that they could be doing?
Well, I'll turn this back on you guys. Have you ever read a book and then gone, geez, I was doing this incorrectly? And you're like,
Many times.
yeah, and you're like, da-dong. All right. So the biggest mistake is not continually educating yourself and taking a proactive approach towards realizing that. I mean, Mina, you're talking about the sole proprietors out there and the small businesses working their tushes off, doing this old joke that somebody told me once. He goes, "Oh, Toby, you're going to work for yourself? Great. You only have to work half the time. You pick which 12 hours of each day." Right. And it's like, that's about it, right? They're working their heinies off. Well, if they're working that hard on that, they need to just carve off about 5% of the time and make sure that they're being wise about the way that they're structured so that they're not, again, I'll use the analogy that I used in the beginning. If you're walking down the street with a bunch of cash and you're getting tired of carrying all that cash, eventually you're like, you shouldn't be carrying all that cash. Or better yet, let's use clothes. Since I use the analogy of you're traveling and you have the toothpaste, right? Like if you're carrying all your clothes and you're getting on a plane and they're like, why aren't you using a suitcase? Eventually it's your fault for not saying, is there another alternative to me just carrying all my clothes? Like eventually you got to look at it and say, I'm being somewhat punished. Like if I don't have any money at the end of the day and I don't have the result that I'm looking for, it kind of goes on to you to educate yourself to see whether or not there's a better scenario for you and to make sure you're doing things wise. That said, there's plenty of resources out there. I know we provide a bunch of free ones, but
Well, let's talk about that, Toby. Let's go ahead and tell people where they can find you.
The easiest thing, I'll just tell people, just Google my name and go join my YouTube channel. Mm-hmm. And there's two things about that. Number one, there's about 600 videos up there on different topics, on different types of tax strategies. And number two is I do something every other week called Tax Tuesday, where we just answer questions people have free, any tax questions you have. And it's not necessarily, hey, go there and come loaded with all your questions. It's go there and listen to the different questions. And you'll start hearing things that you never thought of. And they're all recorded too. So like if you feel like you go back and listen to some from the past, but they're absolutely free. Both of those are just free resources. And if you are a real estate investor specifically, like and you have a few properties, then I would encourage you to go. We do a 1-day class free about every other week called the Tax and Asset Protection Workshop. That is absolutely free. But if you just go to Google Toby Mathis and pop onto my YouTube channel, subscribe, you'll get that information. And there's a ton of freebies because we're big believers in education, getting that knowledge, and then you could take action once you get the knowledge.
Yeah, because then you realize that there is so much you can be doing, but you don't have the tools to go and do it yourself. So you hire the professional because it's also a touchy matter that you don't want to be playing with.
Yeah. And guys, if there's one thing that I would say is make sure that you're using organizations and people, your professionals, whoever's helping you, that do what you do, because there's nuances. Like if you're a small business owner, don't go to H&R Block. Like it's chances are the person who's preparing your return has never run a small business. Maybe you're lucky, but a lot of them are just preparers. And again, they're not really going to know anything about your business. But if you're a real estate investor, you want an accountant that deals with real estate investors. You don't want them learning on your nickel. And I'll just say this because we do tens of thousands of returns. It's like you get to learn a few things. And I know looking at somebody, here's 3 alternatives just off the top of my head, looking at your return that could give you a better result. Are any of these worthwhile doing? Like we used accelerated depreciation and cost segregation, for example. You hear a lot about that when you're a real estate investor. And hey, what are the good, the bad, and the ugly? Like, is this something that'll help me? If so, what does it cost to actually implement it? If the juice is worth the squeeze, then maybe you do it. Does it increase my audit risk? Does it lower my audit risk? Is this something that's going to reap benefits in the future? Like, those are the questions that you start asking yourself, but you got to be working with somebody who actually knows, here's the answers, right? And if you're dealing with somebody that doesn't do what you're doing, chances are they're not going to have any answers. And you're just going to be frustrated because you're like, I know there's an answer. I know there's a better way. Why isn't anybody telling me the better way? And it's probably because they don't know. They're not that specific into your area and they don't see it. Especially, again, you go to the preparer who's doing a bunch of individual returns. They don't do any business returns except yours. They don't do any real estate investors except like that small handful of people, the 5% that do real estate. They're not doing it enough. They're not well versed. They're not going to know the answers. And you're expecting them to know just because they're a tax professional. It's like, no, I could be a real estate investor and I don't know. I mean, I may not know self-storage. I may not know Airbnb. I may not know single family. I may not know multifamily because I might be a specialist in one particular area. Maybe it's professional office space, right? For doctors. I may have a niche. So you really want to be looking around for people that do what you do. Hey, do you deal a lot with single family residences? Do you deal with duplexes? Do you deal with multifamily? Do you deal with syndications? Do you deal with storage? How about house hacking? How about shared housing? Hey, do you work in the charitable realm in that area? You know, all those questions start popping up when you say, what am I doing? And is the professional I'm asking advice from, are they well versed in those areas? And if they are, chances are they're going to enlighten you. And there's going to be a whole bunch of stuff where you're like, wow, I didn't know that. And it's actually pretty cool. And that's why taxes, to me, I get all excited because I'm like, it's like a game. Somebody walks in and they got this set of facts. And I'm like, oh, this, and this. It's actually kind of exciting. And then you see them light up going, I didn't even know I could do that. And I'm like, I know you didn't know because this is so cool. It's like, you wouldn't be doing this if you knew.
That's awesome. So besides YouTube, where else people can find you?
Anderson Advisors is our firm. So I'm one of the founding partners there. So AndersonAdvisors.com. And I'll give you guys a link. I'm sure that we have a special link for your folks too. So I'll make sure that we give that out. But I'm just like, hey, if there's one thing, like somebody may be listening to this and they're not sitting at a computer, maybe they're working out, maybe they're out by the pool, whatever, just come back in and Google my name. You'll find the stuff. I've written a ton of articles and I've done enough videos out there over the last 26 years that you'll find me. And in our firm, you know, Clint Coons, one of my partners, I think you've had him on here too.
Yep.
Fantastic guy. He's like my brother. We've been doing this together for so long, along with Michael Bowman, who started with us, I think, in 1999. I think back, I've been with these folks for a long, long, long time. And everybody is pretty much of the same mindset. It's educate, make sure that people understand what they're doing, and then give them options. And usually it's pretty easy. Once somebody brings their level up and they know, oh my gosh, I could do this, this, and this, they're asking you to do it. They're like, oh my gosh, Toby, this is my hiney's hanging out here. I need to do this and I need to do this. And they're telling me exactly what they need to be doing. And I'm like, you are right, correct. And let's tweak it this way to get a little more juice out of it.
That's awesome. Well, thank you, Toby, for amazing breakdown of IRS codes. I never heard such a, interesting breakdown. That's actually, I'm intrigued and I'm happy for it. You make it sound very nice.
It's a treasure.
Yeah.
Yeah, it
You
is.
have the stories before
Yeah.
ChatGPT had them.
Yeah, exactly. It's like adventure hunt.
I
It
love
is.
that. Thank you so much, Toby, for your time. And I hope people just comment and just look for knowledge and understanding and just for a guide and just for, okay, is there other options? Yes. Yes,
Yeah,
there is.
thanks for having me, guys. Good luck to everybody out there. I know it's hard.
Thank you.
And
Thank you.
sometimes you feel like you're not enough advocates out here. Well, it looks like you got a bunch of advocates. So, and if they're following you guys, Mina and Lydia, that they hopefully they realize that they have some really good people in their corner.
That's awesome. Well, thank you, Toby. And until the next time. Bye-bye.
Bye.